Starting today, I want you to commit to avoiding these 4 day trading mistakes. And it doesn't matter whether you're a beginner or you're a pro. And the first mistake is the emotional decision making. And really, it's easy to let your emotions like your fear and your excitement just take over when you're trading. Well, this leads to decisions that are not always the best. So think of trading like an assembly line. Each step needs to be precise for that final product to be successful. So trading's no different. To combat emotional decisions, create a detailed trading plan. Write down when you're going to buy, when you're going to sell, how much risk you're comfortable with, what your profit targets are, and just review this plan every single day, even if it's memorized, before you trade. And this structured approach, it's going to help you stay disciplined. It's going to help you keep your emotions in check, ensuring each part of your trading process is aligned and is effective. And the bottom line, take 0 trades that do not conform to this plan. 0. And if you want to take that trade, walk away from the screen. Let's move on to our next one. Lack of a trading strategy. When you jump into a trade without a clear strategy, it's going to lead to trouble. Without a plan, you are going to make those impulsive decisions, those risky decisions. And this all ties into that first mistake, emotional trading. So develop a strategy that includes analyzing the trend, looking at the news, set your risk limits, and defining a profit goal. And just make it a habit to check market updates every single day to ensure your strategy is on top of it. So here's a quick little strategy. So just pretend you're interested in trading stocks in the tech sector. Well, you might do this. First step is market analysis. Just identify the trend. Is it up? Is it down? Is it sideways? Different ways you can do that. Look at the news. Is there anything that's related to the tech industry? For instance, is there an announcement about a new product launch? Or is there an announcement about a regulatory change? All these impact stock market prices. Just make it a habit to check it. Set your risk limits. You have to know how much of your capital are you willing to risk on each trade. Now, a common rule is to risk no more than 1 to 2% on a position. Well, this does help protect your account from significant losses, but there are times my risk will be upwards of 10% depending on the setup, because I might need extra room to let that trade run, but I still want to have a decent position size. Stop loss orders, you have to use them. You have to automatically sell a stock if it falls to a certain price. This is going to limit your loss. It's going to help you stick to your risk management plan, and there's no emotion involved. Profit goals, set a profit target. So for example, you might aim for a 5% gain on each trade. So this helps you know when to exit a trade and secure your profits. And this comes from testing and looking over hundreds and hundreds of charts. There are some trades that I look for 15 to 20% gains in price. Just review and adjust. So regularly review your trades. Are you meeting your profit goals? If you're not, well, just analyze what went wrong. And nothing might have gone wrong. It could just be the market. And just adjust your strategy if you have to. And have a daily routine. So again, make it a habit to check market updates every morning. This is going to ensure your strategy that you're about to take is actually informed by the latest market conditions and the news. And before you start trading every day, review your strategy and your trading plan. It's going to keep you focused. So most important, just have a few key things that you do before you trade. Visualize that you're always in control of what you're going to do. When you find your trades, get in without pause. There's no extra confirmation. There's no call a friend. If it fits your plan, you're in. And sell into strength. Don't wait for that market to start pulling back against you. So if you follow a structured approach, you can develop a solid trading strategy. It's going to guide your decisions. It's going to help you avoid impulsive and risky trades. That thought out trading strategy, man, that's the roadmap to success. Third, ignoring the risk of losses. If you underestimate the potential for losses, you're in trouble. These can be detrimental to your account and to your confidence. Now, losses are absolutely a part of trading, but they're also learning opportunities. So keep a trading journal. Document what went right, what did not go right. This reflection is going to help you learn from each single trade, and it's going to help you improve. Take screen captures of your charts, where you took the trades. You mark them up with each step that you took, what news might have impacted it, any relevant information that can help you, even how you felt. Fourth mistake, failing to adapt to market conditions. Markets are always changing. Instruments are always changing. And when you stick to an outdated strategy, it's going to leave you vulnerable. Here's an example of being vulnerable. Pretend you have a trend following strategy, and it's based on a moving average crossover, something simple. And this strategy signals you to buy when a short-term moving average crosses above a long-term average. That's the uptrend, so you just buy on a retest. Well, in a range-bound market, these crossover signals are going to become absolutely unreliable. Prices can oscillate back and forth within a trading range. It's going to cause frequent false trades that you're going to fail. You could find yourself buying at the top of the range, selling at the bottom of the range. It just leads to a series of small losses instead of you capturing that sustained trend in your trend following strategy. And the key takeaway from all this, all these mistakes are really important, but managing your risk is key. And it's definitely not the most exciting aspect of trading, but it's what's going to separate success from the rest. But listen, this is assuming that your strategy is even a good one. A bad strategy, you're going to eventually destroy your account by 1,000 cuts. But when you focus on risk management, you actually can trade with some confidence and you can protect your account from those major losses. So wrapping up, staying clear of these 4 mistakes and applying the strategies we've talked about, you can absolutely improve your trading skills. You can absolutely work towards long-term success. You got to remember this. Trading is a journey. There's no destination. It's just a journey.
Everything discussed here is our opinion, and it is not to be taken as investment advice because we are not your financial advisor, nor have we considered your personal situation as your fiduciary. This presentation is for your education and entertainment only. Please review NetPicks' full risk disclaimer and privacy policy.